Everyone, Assalamu alaikum wa rahmatullahi wa barakatuh. It's a pleasure to have you here. That despite your busy schedules, you have managed to make time for us. We are very happy for that. My name is Ibtisam Muhammad. Some of you already know me. I'm the team leader of the amazing Mombasa team. And Team Mombasa, NSSF, its main aim is to improve your customer experience. We are focused on improving customer experience. Thank you very much for that introduction. We are here today to explore the easy transition and implementation of the new rates, third year new rates. But before we do that, I would like to reassure you that NSSF Mombasa is committed to give friendly services, is committed to satisfy or even go beyond your expectations when it comes to customer service. NSSF Mombasa is one of the best public offices with friendly public officers you can find, not only in Mombasa in comparison with other officers, but in Kenya as a whole. And this is not by fluke. We take a lot of time to engage customers. And the little knowledge I have in marketing, I've been told there's nothing stronger than wanahitaji kanisani ushuhuda, a testimony. So that I don't look like I'm biased. Because I know I have my friends, my childhood friends are here in Lydia. I can easily call Lydia and ask her, please come and give us a good word about the customer experience we've had in Mombasa. But I will not do that. I will just ask for a volunteer to give us just a genuine, unbiased customer experience that they've had in our office, just to support or even negate what I just said. Please, just a volunteer. Anyone to volunteer? You can start.
Habari zenu tena. Kwa majina ni Basi Mkenya. Tangu nianze kufanya kazi ya accounting, by profession I'm a tax accountant from Kesra. So I've had an experience from KRA, NSSF, NHIF, and so forth. But from all that experience I've realized one thing. NSSF is the only place that I've had to encounter most honest people. So nashukuru sana, makofi kwenu. So the other thing is they are too friendly and they are always open to help at any time you are in need of their help. So thank you very much.
Thank you, I'm so elated. I didn't expect that. Thank you so much for that, because my fingers were crossed. I was like, okay, what will he say? Anyway, thank you so much. We are elated. That gives us strength to continue to do what we know best. Thank you very much. And with those few remarks, I would like to welcome all of you to our office. Yeah? Most of you have a habit of sending people when you need something. But now that you know us, you'll be more willing and you'll feel freer to come to the office. Isn't it so, Florence? Yes. Thank you so much. So we are here today to explore the topic of implementation of the new rates in its third year. We were hoping that after this session, we will be in a position to smoothly transit to the third year implementation of the new rates. So the best way was to impact knowledge. So we expect that by the end of this session, we'll, with our main facilitator being our most able Mr. Evans Ouma, will be able to answer the questions like why NSSF? Why, what is so unique about NSSF that will want you to be retained at NSSF? Why, for those who have opted out, why should you opt back in Mombasa Hospital? We want to tell you why you should opt back in. What is so unique about NSSF? Things like government guarantees, which you will not get in any other scheme. We are not here to badmouth any insurance company. We are just here to market what we can offer. And we definitely have very strong points to market on that. We are also here to talk about these jargons, tier 1, tier 2, so that we can be more familiar with them, especially so because the service portal is able to automatically calculate for you the tier 1 or 2. But for today, Mr. Evans will be able to explain to you what it all means. And we are also here to lure you back, to opt you back in to NSSF, and why you should stay with us at NSSF. We are also here to explain to you about the benefits that we offer. Already the issue of benefits has been raised by one of you about the immigration grant. We have our most able Madam Winfred Riga, who will be explaining on all matters regarding benefits, because that's our key selling point. If you are able to contribute, then you should be paid on time. And we have our CPA, Madam Evelyn Mangale, who will speak the same language as most of you CPAs here. I know you like being with your colleagues. We have our CPA here, who will explain to you. She will explore the issue of the self-service portal and the merger of our system with the banks, and what happens sometimes when there's an off system and you don't find your receipts. It has happened to Lydia, when you can just SMS me or WhatsApp me, and we'll receipt it for you in cases whereby the merger didn't work. So I will end by giving you my mobile number, just in case you need to call for any services. You can call and we'll serve you. My number is 07 37 090 128. We're in a modern world, and the world has become a global village, and you don't need to move from your comfort of your office or from the comfort of your home to be served. I pick calls even on Saturdays. Some of you can attest to that. Though we don't work, I prefer not to to take any calls on Saturdays. But for those who, I know that most of our clients are still working on Saturdays, and they could be having one or two challenges. And in that case, I do still pick calls on Saturday, half day. Thank you very much. With those very many remarks, I would like to now welcome our main facilitator, Mr. Evans Ouma, to start with the presentation. Thank you.
Good morning, everyone. How many in this room are here in a similar sensitization for the first time? Are coming for an NSSF sensitization for the first time? This is the first sensitization you are attending when Madam Florence. It's quite a number, eh? Karibuni sana. Karibu sana, Madam Florence, our stakeholder. And I would like to take this opportunity, first of all, to thank you for agreeing to come. I know there is a lot of activity in the various places where you work, but you found time to come and attend this sensitization. And secondly, I'd like also to thank your employers that have also enabled us, they are our stakeholders, to continue being there. I would wish to just state that I did not hear any of you say what your expectations were. I tried to ask that you say your expectations in this training, but only one person, I think the lady from Kagolog, is the only one who said her expectations, that she wants to know something about immigration. If she's leaving the country and she's going out of Kenya, what will happen? And I think Madam Riga, is Madam Riga? You will begin with that when you will be doing your presentation. And since you do not have specific expectations, I hope this presentation will meet all your general expectations. Now, we are here to do a sensitization. It's a very interactive engagement where we are going to tell you about what is on your minds, this movement to year 3 of the implementation. Why are we moving to year 3? Why did we move from 400, where we were 200 for the member and 200 from the employer? You know, the cost of living is going high, cost of doing business is going high. So why all this? Why are all this happening at the same time? Yeah? And so we hope that by the end of it all, you'll have this movement to year 3 of the implementation. Why are we moving to year 3? Why did we move from 400, where we were 200 for the member and 200 from the employer? You know, the cost of living is going high, cost of doing business is going high. So why all this? Why are all this happening at the same time? Yeah? And so we hope that by the end of it all, you'll have had some clarity and you'll have had some knowledge. Now, briefly about NSSF. It began in 1965 and later on became, initially was operating under the Ministry of Labor, but later on became an independent state corporation that was formed under the NSSF Act Cap 258 to ensure that members of the Republic of Kenya are able to have a retirement benefit that is guaranteed, so that when they work for the period they are employed, the member will contribute something, the employer will add on a similar amount, and then that member is able to get something put aside or saved. NSSF, as a government body, has a governance structure. The board is a tripartite board consisting of workers that are represented there by the majority workers union. So As an employee, you've been represented through the workers' union, COTU, and then the employers, the companies you work for, have an umbrella union, FKE, that sits on the board. Then we also have government represented by the PS for labor, PS for finance, and then there's also a representative from the private sector, the sector that most of you are from. So this governance structure ensures that everyone has a say. As a worker whose money is being deducted, you have a say through your representative. As a company, as an employer, you have a say on the operations of NSSF. And finally, the government comes in as a guarantee, and they also do an oversight in the board. So that is the structure. This structure ensures that, one, there is accountability, and two, there is the issue of your voice being heard. The voice of the member, the voice of the employer is heard from the topmost level of the organization, which is the board. Now, currently our coverage, NSSF has 64 branches all over Kenya. From whichever region you come from in this country, you're able to access the NSSF services, and we are in all Huduma centers, all the 59 Huduma centers. If in let's say your region or your county, the office, the NSSF branch is far away, then there are Huduma centers that are also in strategic places within the country, and NSSF is in all those Huduma centers. This is to ensure that we get as close to the members we serve as possible, yeah? And we are able to serve the entire country, so that we are not only in Nairobi, or we are not only in the big cities, but we have a nationwide coverage. Now, what are some of the key features of NSSF as an organization? We have a diversified investment portfolio. I'll give you an example with Mombasa. The building that houses us, the National Social Security Fund, we're only on the ground floor. For those who've come to our office, we're only on the ground floor. Then the rest of the office is occupied by tenants who pay rent to NSSF as a fund, yeah? And such buildings are spread all over the country. Then we have a nationwide coverage that I've talked about, 3 million active members. Those are contributors currently. And that number keeps growing because companies, as they keep opening up, and as the population keeps growing, then that number keeps growing by the day. Then we have a financial portfolio of 400 billion Kenya shillings. How is this relevant and how is this good to you? It means as a member, your money in your account is guaranteed that from the time you begin employment, at whichever age you started employment, to the time you retire, that money is guaranteed that you will have it because of a strong financial backing. Then we have good governance and oversight, which I've covered in the governance structure. And then the Tier 1 and Tier 2 Provident Fund and Pension Scheme, I'm going to explain it in detail later on in this presentation, that how is that a key feature and how does that relate to you as a member and to you as an employer. Madam Riga will expound on this, on the benefits that are offered in NSSF. She's going to give you in detail how these benefits are claimed, but just an overview is that those are some of the benefits that we offer. A few, not all of them. She's going to give you the details, yeah, of the benefit packages. Then we go to the elephant in the room. Why enhanced rates? It began initially, there was the contribution of 80 shillings, 80 shillings. How many contributed 80? None in this room has their statement. Madam Ibtisam says her statement. 160, yes. 160, yes. So that was the contribution a while ago. Then from 2001 November, the contribution was now upscaled again to 200 shillings. 200 from the member and 200 from the employer, 400. Now from 160 to 400, there was quite an uproar then. because that was a huge difference. The same APRO that is there now was similar to when we were moving from 160 shillings to 400 shillings. It was a considerable jump. It was more than double the amount. Yeah? But then, even when the 400 shillings was in force, you look at a typical employed Kenyan who joined employment at the age of, let's say, 25 and 30 years old. Yeah? And then they work for a straight 30 years. That is from 30 and retire at 60. Now, at 400 shillings, it means in a year that member was contributing 4,800 shillings. In 10 years, that is 48,000. Now, in 30 years of hard work and hard labor, most of our members who are retiring were going home with about 200,000 shillings or 250,000 shillings. Now, if you just do a basic math and ask yourself, if this member retires at 60, gets 200,000 Kenya shillings to go home with as their retirement package, they are working in Mombasa, maybe their home is somewhere in Eldoret. For them to relocate, for them to go back home, are they left with anything even to build, to open a kibanda? Definitely it wasn't possible. So, one of the reasons for enhancing this rate is that it was no longer practical for our members to be able to retire with the amount of money when it was at 400 shillings. It was not sufficient to even take them beyond 3 months from retirement. Remember, your pension or your retirement package is supposed to last you from the date of retirement to when? To death. We are looking at an average of 25 years. Yeah? When you retire, the money is supposed to take you for an average of 25 years from the date of retirement. Now, how long does 200 or 250,000 take you in the current economy? Basil, how long will 200,000 take you? Basil says 200,000 will be spent in less than 6 months. So, are we getting the economy and the economic perspective of this, of what we are trying to talk about? That 200,000, 250,000, 300,000 per se is most of us, or an average working Kenyan for 25 years, no matter how well they spend it. Yeah, 25 years is such a long time for 200 or 300,000, because you're looking at them spending an average of 20,000 a year, which is again not practical. So that is one of the reasons as to why the rates now had to be enhanced. For one, so that it is able to give provident and pension fund savings to members. 2, so that it enhances social protection. 3, for better returns. And 4, for targeted retirement planning. So, provident and pension fund savings. At retirement, 2 things happen. When you claim, there's an amount of money that you're given in lump sum, mara moja, yeah? It's called a provident fund. It is paid one-off. Currently, the claims that we are paying, Madam Riga will tell you, currently all the claims we are paying right now are provident fund claims. It means all the money that is in your NSSF statement as we speak, when you come to NSSF and claim it today, you're going to be paid all that money as a lump sum amount. That is what we call the provident fund. Now, pension fund is supposed to now be monthly payment. That upon retirement, you're supposed to get money every single month till death, right? Now, the new act came in to enable you as a member be able to get a one-off payment upon retirement, which is what we call Tier 1. And then what goes to Tier 2 in your statement is now meant to now be a monthly pension payment. The same way, those who are pensionable, let's say civil servants and those who are in companies that have pension, it works the same way. You get a lump sum payment and then you get now a pension payment to be able to last you for the 25 years that we're talking about. So that is why the rates had to be enhanced. And 400 shillings was not practical to have a provident fund and at the same time have a pension fund to enable our members be able to get something little till for their sustainability after retirement. Second, enhance social protection. In Africa, one of the challenges we face is black tax. That you find that in a family, you have one or two people earning, the remaining are not earning or are not financially stable. So when the person who is earning retires, there is now no sustainability in terms of social protection. This person is unable to afford healthcare, they do not have a pension scheme, this person is unable to afford decent clothing, decent housing, transport, and all these manner of things. So enhanced social protection only happens when now members of a community are able to have some money to protect them against the vulnerabilities that come from a loss of income. Now, that is only possible if everyone who was maybe had an active income is able to retire and not depend on the children. Many of us in the societies we are from, we are in a situation where the parents spend all their income to take the children to school so that the children are able to take care of them as retirement. Isn't that the case in your communities? Yeah? Parents take loans and loans and loans to take children to what? To school. And then they say that once I've educated my children get jobs, my children will do what? Will take care of me. Now how many Gen Zs are taking care of their parents right now? Are they even bothered? So what happens when you will retire? Yeah? Most of you who are parents, trust me, the children that are currently being raised in this generation do not share the same values you share. If you are taking care of your parents every day, your children do not share those same values. They will wonder, why don't you have money? Yeah? From the onset, why are you expecting money from me? This is my money. I want to go on holiday, I want to buy an iPhone, I want to do all these manner of things. And so, if you're educating your children in this current dispensation for them to take care of you, you might be in for a rude shock. Yeah? That is in the generation that is now being outgrown. The younger generation are sharing different values, and therefore the issue for social protection for them is wewe jipange. Mzee jipange, mama jipange. Kila mtu ajipange on their own. Yeah? And then next is for better returns. Interest that is paid on your NSSF accounts, for those who printed your NSSF statements, and I encourage each and every one of you to print your NSSF statement. Interest is credited based on the amount that has been invested. Yeah? That is the amount that is in your account. Now, if you have 100 shillings, even take the bank. If you take 100 shillings to the bank, how much will it, if you put it in a fixed deposit amount, the percentage that you will get even after 10 years, it's not so much. So the more that is invested, the better the returns. So that is why the rates had to be enhanced. And then finally, targeted retirement planning. You're able to put a limit and say, by the time I retire, I want to be able to, upon getting my lump sum, do A, B, C, D, and then my monthly stipend or my monthly pension will enable me to now do this, do this, do this, and do this. You're able to target. That wasn't possible when we were doing the 400 shillings. Now, the Act implementation timelines. We keep saying, he new rates that are coming about ni tax. Hizi taxes mingi zinakuja saizi, kila kitu saizi ni tax. Yeah? I'd just like to refresh your memory. In 2014, January 10th January 2014, the NSSF Act 45 of 2013 was passed. So this act came into place in 2014. Now, our country has a beautiful constitution. Our constitution is so powerful that even if the government or players or individuals want something to happen, anyone can go to court and do what? And stop the implementation. So a few players went to court in 2014 and they stopped the full implementation of the act. Remember, this is 2014. Now, as at that point, some employers decided to continue paying the new rates. We have companies that started paying the new rates in 2014. February, they had onboarded, they were paying 2160. In fact, right now, when people are complaining about this, they are wondering, kwani mlikuwa bado mnalipa 400? they're really surprised that mlikuwa bado mnalipa 400. We stopped paying 400 in 2014. Over 10 years ago, they've been paying the new rates. But a few said, there's a court case. We will start complying once that case is done what? It's completed with. So it started in 2014. Then in 2023, there was now a determination of that. And so year one implementation was done. Now in year one implementation, which was supposed to happen in 2014, the maximum limit for contribution was 18,000. Yeah? And you wonder, why did we put these limits of 18,000, 36,000 and the rest? Briefly, you see, whenever you introduce something that will affect people's pay slips, there has to be planning. Companies plan, companies budget, even as individuals you plan and you budget. Now, the idea is for each member to contribute 6% of what they earn to NSSF as a deduction, and the employer to also add a similar amount, which is 6%. Then contribute for that member 12% of their gross pay. That is the idea of the Act. Now, when we talk of implementation, we are not talking about the 6%. The Act says deduct 6%, employer add 6%. Save for this member 12%. But now why are we talking about year 1, year 2, year 3, year 4? So for the sake of planning, you take an example of companies that pay, let's say, salaries from 100,000 and above. Yeah? The moment from day one, you start deducting 6% for everyone, and the company had not planned for it, and they also have to add a similar amount, 6% for everyone. It means from day one, you're taking about 6,000 from the lowest paid, and the company is adding another 6,000. Assuming this company had 1,000 people, it would have been a root shock. So what happened is, they said from year one, we will only take 6% of 18,000. Remember, I'm giving an example of an employee who is earning 100,000. So year one, we will only take 6% of 18,000. Then in year two, we will now take 6% of 36,000. And then we will keep increasing it up to the point where now we get to a point where this member, we are deducting them 6% of their salary. So when we talk of the increment, we are not talking of the rate. The rate has remained the same. The rate is 6%. Now what happened? Low income earners, those are employees earning below 18,000. At implementation, tayari walishafikiwa wao. Unfortunately. Because from day one, 6% of their salary was deducted. In short, 6% of the entire salary was deducted. But high income earners, let's say like your MPs, your governors, your women rep, and all these other high income earners were only paying 6% of a fraction of their salary, of 18,000 of their, just a fraction of their salary. It's not even 10% for most of them. It's not even 10% of their salary. We're just paying 6% of a fraction. But the Act says at some point we have to get to 6% of their entire salary. So year one implementation was 6% of 18,000. Then we double it the second year to 6% of 36,000. Then we double it again to 6% of 72,000. Then we double it again to 6% of 144,000. Then again it reaches to a point where we will get to 6% of the salary of that high income earner. But for a majority of workers in this country, they earn an average salary of below 36,000. A majority of workers in this country. If you look at statistics from Kenya National Bureau of Statistics, the average income earning is 36,000. So many people are earning below 36,000. Hao walishafikiwa. The remaining people wenye bado hawajafikiwa, when I look at how bright your faces are, naona ni kina nyinyi tu. When I see how bright you are, nyinyi ndio hamjafikiwa, high income earners. They are the decision makers in the company. But you ask yourself, why 6% of my salary? Why can't they just do with 6% of 18,000? This is the rationale. You retire to live the type of lifestyle you are living when you're still employed. you do not retire to suffer, right? Someone who is earning 500,000 has a totally different lifestyle from someone who's earning 20,000. For one, they go to different hospitals. Two, they shop in different places. They look for different goods and services. And then also, they have different priorities from someone earning 20,000. True or false? Now you're imagining someone who is earning 500,000 is only saving 6% of 18,000, which is 2160. If they save that for 30 years, assuming they consistently earn 500,000, and then they retire with that, it will not take them 2, 3, 4, 5 years. The same mathematics we did, right? That for them, that is still too little to sustain the type of lifestyle that they were living. So they have to ultimately save 12% of their salary to ensure that they enjoy the same lifestyle that they were living upon retirement. Now, up to that point, is there anyone who is confused, who does not understand anything? I said this is an interactive session. Yeah? We will have a question and answer session after, but if you need a clarification, up to this point, we can just take a minute, just get a clarification and we proceed. If you may need a clarification.
Is the final year or you still continue? I think I'm only good enough to do.
He's asking, is year 3 the final year? Remember I said that when we started year 1, we were looking at 6% of 18,000. Year 2 we do what? We double to 6% of 36,000. Year 3 again we double 6% of 74. Year 4 again we double 6% of 144. Then year 5 again we double. Then from year 6 it is 6% of the total amount someone is earning. I'll give you an example. Is there anyone here from Corp Bank? There's no one here from Corp Bank. The Corp Bank CEO is the highest paid chief executive officer in the country. Eh? He earns, is it $1 million bob a day? I think he earns $1 million bob a day, or no, I think he earns $2 million bob a day. Yeah, he earns $2 million bob a day. He's the highest paid CEO in the country. $2 million bob a day. One day, he wakes up in the morning, jioni kifika, he's earned $2 million bob. Now this person is in the payroll, right? Now since he's in the payroll, at the end of the day, he has a savings for his retirement. Because ultimately he will have to retire. We're not looking at the individual, we're looking at the position. Someone in that position, okay? And I'm just using that as a reference. So someone in that position, at the end of the day, they have to retire. As we assume that this person has savings, they have investment, and they have all manner of things. But social protection also requires that they have to have a pension to enable them live. Now you're imagining if this person is also going to retire with 6% of 18,000, surely. Itam's idea. Kama in a day he's making 2 million shillings, will 2,160 help him survive. So from year 6, now it reaches that limit where it is 6% of all the salaries in the country. From those who are earning 1 million shillings to those who are earning 10 million shillings, to those who are earning 20 million shillings, it will be 6%. The best example is SHA. Remember, SHA was implemented at 2.75% of all salaries, irrespective of how much you're earning. True or false? Aren't you deducting SHA for gross pay, irrespective of how much someone is earning? From the onset, they did not have an escalation. Sasa mbona yetu mnapiga kelele sana, na even we gave that room for escalation, for planning, for purpose. SHA did not give us a notice. I remember waking up and anaangalia payslip, you feel like you cannot resign because you need the job, but what do you do? Yeah? So at the end of the day, we are supposed to get to 6% of everyone's salary. So I hope you've been answered. Yeah? It escalates till year 6 where it becomes a flat rate of 6% of the salary. My mic is dead. I hope I'll be audible enough as they fix it. So since there is no question there, let us proceed briefly. So further explainer for year 3, and I know that's what you're interested in so much. For one, the NSSF is not a tax. You are accountants. I've heard from introduction, most of you are accountants, so you know. I don't even need to tell you. These are some of the things we say when we are doing sensitization for, let's say, non-accountants, for people who are in other professions, engineers and the rest. How sasa waelewi? Wao wakiona NSF, they feel it as a tax, but accountants, you know, this is not a tax. Yeah? 2, the maximum limit for year 3 is 72,000. I, however, know people who have come and said, hii maneno ya kushinda tukichange payroll hatutaki. Your act says 6%, we are going to enforce 6%. So, as you escalate, you will not bother us anymore. Right? And there are some companies who are just coming out to say that when we look at our payroll, we see maybe a few people are the ones earning above this 72. But for the rest, a majority of them are earning below. So since it's not of such a big implication, we are just effecting it for everyone so that we don't keep getting to rebudget and do all these manner of things in the consecutive year. Maybe it's something you can consider, depending on if you have a say in the company. Mesikia nyinyi ni wakubwa, wengi wenyu ni wakubwa kule mnafanya, and you're the ones who influence.
Maybe you influence decisions based on your advice and the rest. That might be a way to go. But then the limit currently for year 3 is 72,000. The increase in the limit does not affect employees earning below 36,000. They were affected year 1 and year 2. So then they were already at 6% of the amount. Right now we are getting to the 6% of high income earners, kina nyinyi, unfortunately. Yeah? And then it reduces your tax and your gratuity liability. I know some of your CBAs, you have CBAs, you signed CBAs, there are companies here that negotiate CBAs with the workers. Is there any company? Which company? Port DT Sacco, Mombasa Mezzulas, yes. In some of your CBAs, you also negotiate the gratuity amount, right? In some of the CBAs. So maybe as a result of the CBA, it might be there, but if you look at the Employment Act, section 35(6)(a), it says that when you give an employee notice of termination of contract, you are supposed to pay a gratuity of a fixed amount for the number of years worked, unless, and that is the clause, you are contributing to NSSF or any other pension scheme that is registered by RBA. What it implies is that if you are contributing this amount to NSSF, then if you give that notice, then you will be liable to the 1 month in salary in lieu of notice, but they cannot sue you for non-payment of a gratuity. That is the implication. Yeah? So it is also a savings to some extent to the employers. Now, this is the tabulation. I usually advise, for those who've come to my desk, I usually advise that in that payroll, instead of cramming all this, just put the gross pay as it is in the payroll. You do the uploads for the payroll template, right? The first column is the payroll number, the second column is surname, third column, other names. I'm talking of the Excel sheet. How many prepare the Excel sheet for the company in here? How many of you prepare the Excel sheet? Yeah, I was waiting to see kama utaweka mkono juu. See, when you prepare the Excel sheet, you populate that Excel sheet with the details of the workers for that particular month, right? The last 2 columns talk about the gross pay and voluntary contributions. So I usually advise, since the limit for the year 3 is 72,000, anyone who is earning above 72,000, put the gross pay as 72,000. Anyone who is earning below 72,000, put the gross pay as it is. The system will do the rest for you. It is so easy. because now the system will just deduct 6% of the gross pay as it is. So the tier 1 limit is 8,000, tier 2 limit is 72,000. You do not interact with this anywhere when you're preparing that payroll because you're only talking of gross pay. This is how the figures are tabulated in your member statement. I explained to you when we began that now the new act brings in a provident fund and a pension fund. The amount that is going to tier 1, this is the 960 for every month going forward, plus what has been going in there from 2023 and 2024. That is the figure that you will be given as a one-off payment upon retirement. One-off payment. Then the amount that is going to tier 2 is the amount that you will be given now as a monthly pension. Now I know you will ask, what about people who are about to retire? Those who are maybe 5 years from retirement, 4 years from retirement, 3 years from retirement. Now the Act gives some clarity and it says, if the amount in your pay, in your NSSF statement is not sufficient to enable you get a monthly breakdown, that is the monthly pension, then we will pay you that entire amount as a provident fund, one-off. The same way we are paying those who are currently retiring right now. Because it won't still be enough to pay your pension. But Kina Basil, who are still going to work for several years, will now qualify to get what is in tier 1 as a provident fund and what is going to tier 2 as a pension fund. Is that clear? Yes, so this is not about, someone saying, why are you taxing us twice? Now, the further clarification on this is, the Act allowed for registered pension schemes, those pension schemes that are registered and that were running, to also continue to operate. Now it said that those pension schemes, those employers who their staff are already in registered pension schemes that were already having a pension can decide to opt out of NSSF. Now the moment they opt out, what happens? The tier 1 contribution remains to NSSF, will keep coming, but now what they will have paid for tier 2 is the one they sent to their pension schemes. We have companies here like Kina Mombasa Hospital, Kina Pandia, and the rest that have pension schemes, and they are taking the tier 2 contributions to pension schemes. But the tier 1 contribution is coming to NSSF. Case example, government employees who are civil servants, teachers, doctors, nurses, and the rest. They have the government pension, and that government pension takes what would have been their tier 2 contribution, and their tier 1 contribution comes to NSSF on a monthly basis. You realize that before the enactment of this Act, those members were totally not registered and were not members of NSSF. They were only paying to the government pension. But the moment this Act came in place, it now mandated them and required them to come and register and pay tier 1 to NSSF and tier 2 to their respective pension schemes. Now, as employers, these are some of the following considerations you will need to make to ensure that you take care of your staff. For one, low-income earners are more vulnerable at retirement. Yeah? So if you're a company that has most of your staff, let's say, earning 50,000 and below, and you want to make a decision of opting out of NSSF or not opting out of NSSF, you have to keep this in mind, that those low-income earners are very vulnerable. They are more vulnerable than high-income earners for various reasons. For one, high-income earners have various other sources of income through maybe their investments and the rest. Low-income earners, most of them, they live hand to mouth. They live from month to month. So upon retirement, they have nothing else apart from these savings. So these are some of the considerations you have to make. I know that you people are good people, but we have some employers who are even now purportedly shrinking the salaries of workers, so that they do not pay NSSF contributions. But then when we do audits, now we have to demand the full amount as it was initially. Then they now have to pay the arrears, they pay the penalties. It is an exercise in futility. But in reality, they are just trying to cheat the workers of their right. Remember that the worker is supposed to have their retirement secured through the contribution that the employer makes for them from their deduction, and also the employer matching that contribution. That is what secures them. So if you have someone earning, let's say, below the limit of 17,900, maybe earning 15,000, and then further to that, you're only paying for them for assuming they are earning 6,000. It means you're robbing them twice. For one, you're denying them the right to retire in peace with something that can enable them. You're shrinking their contribution, you're also shrinking the contribution that you as an employer would make. Now, the moment you keep in mind that low-income earners are more vulnerable, it means that when you're making some of these decisions, you have to get to realize that these people are the ones who mainly flock our offices. Day one, they've retired today. You usually give them those retirement letters, right? The ones that say you've worked for us for this period and now today is your official retirement day. That letter will be dated 4th, yesterday. 5th in the morning, before we open our offices, they are there outside the office waiting to claim. But then, kina nyinyi, you will retire, you will go do your do holiday, your retirement, and all this manner of things, and then 3 years down the line, I had some money in NSSF. I get some calls at times from some of my friends and they tell me, ile pesa bado iko. Can I claim it today? 5 years after retirement. Because high income earners have other sources, but low income earners are very vulnerable. So you have to keep that in mind at all times. They are extremely vulnerable. And since they are extremely vulnerable, ensure that religiously you pay for them this money. Security companies, companies that do contracted services like labor and the rest, those employees, those workers are very vulnerable. So ensure that you help them secure their futures. 2, scattered contributions lengthen the time of claim. And let me give you an example. Right now, since the Act allows for opting out, you have companies that are bringing out opting out certificates to our office every single day. Now, in most companies, there are 3 levels of staff. In the majority of companies, there are the lower cadre, the bulk force of the company, then there's middle level managers. I know quite a number of you are there. Then there's the senior managers, the directors and the rest, the senior managers. Now, senior managers and middle level managers, most of them are educated, they have the information. So you take a company that has opted out and is paying Tier 2 contribution, let's say to APA insurance, right? So a low level worker, let's say a driver or a cleaner or a security guard, joins this company and serves for 2 years, right? They leave your company, they go to Mombasa Hospital. Mombasa Hospital, I think they're taking their contributions to Jubilee. They work as a again, low-level staff in Mombasa Hospital for 5 years, right? They leave Mombasa Hospital, go to another company that is taking the Tier 2 contributions to Heritage. Now, for the 30 years this employee has worked, this employee has had their NSSF Tier 1 contributions coming to NSSF religiously. But in between, some money has gone to APA, some money has gone to Heritage, some money has gone to Jubilee, some money has gone to... You understand where I'm going with this, yeah? Then it reaches a point that this person is about to retire. Then unfortunately they pass. Okay? Unfortunately they pass. Now their family wants to claim. The family might know they worked for this company for 2 years, another one for 3 years, Where do you think they come first? Out of all these companies, where do they come first? NSSF. And when they come to NSSF, what do they get? The Tier 1 contributions. Most of them might know about Tier 2 maybe from the last employer. Because you realize, assuming if this person passed when they are in service, they will go to the last employer. The family might go to the last employer. They will have no idea that kuna pesa ilienda APA, kuna pesa ilienda Jubilee, kuna pesa ilienda Heritage. And since that money is going to stay there, there's a law that talks of the unclaimed, that brings in the Unclaimed Financial Assets Authority. It reaches a point APA now sends that money to UFA. These people have never even heard of Unclaimed Financial Assets Authority. Never heard of Unclaimed Financial Assets Authority. So they don't know. It means the moment this money is scattered all over the place, you have again brought back this person to the vulnerability that they were avoiding in the first place. So these are some of the considerations as employers to make. And often I advise employers that if you want to opt out for the mid-level and the senior level for them, the moment you start scattering it around, it will not help them. And so as an employer, keep that in mind, yeah, especially when some of these corporate decisions are made. Opt out for senior managers, say, hawa ni watu wanajielewa. Either way, they will know where this and these offices are. But for the low level, just leave them. They're better off there. They uko kwao, Homa Bay, Kitui, Mwingi, Nini, Mali, they will get an NSSF office and they will be served. But the moment they are uko in Lodwar and they want to start looking for a Jubilee office, like apana Lodwar kuna Jubilee office. Uko Turkana, I doubt. They will start making calls and they might not be able to get it. So those are some of the considerations. And then, tracking of contributions shortens the claim process. How does this happen? Advise your workers and their members, every other time they join your company and they stay for 6 months, tell them, come and print your NSSF statement. You can even do it for their behalf. Every 1 year or so, print the NSSF statement. See if there's any gap. Sort out that gap, right? That is what we call tracking of contributions. So that if this person works for you, by the time they are exiting, their contributions are up to date. You do not have the compliance officers coming and saying, oh, this gap and this gap, kindly just a schedule, this person needs to retire, and you want to pay their money. So if you advise your workers to track those contributions, even from their previous employers, they are able to fill those gaps. By the time they retire, the claim process is very fast. It has no, go fill this employer never paid for you, etc., etc. I'll give you an example. Teachers who are retiring now, most of them when they were employed as untrained UT teachers. When they were UT teachers, their monies for NSF was being paid, right? being deducted. Now, later on they were absorbed and became permanent and pensionable. And as I've told you, when they were permanent and pensionable prior to this new act, they were not contributing to NSSF. Then in 2023, when the act came in full force, they again started contributing to NSSF. Now the moment they came and registered, they started saying, but in 1985, I was working as a UT, na nilikatwa pesa for 2 years. Your pesa ilienda wapi? And we asked them, did you go to an NSSF office to take a card, to register? No, sikuenda. So ulikuwa unakatwa tu pesa and you never went, mnisaidie kupata hiyo pesa. Now imagine, so you have to start finding what is your TSC number, where did you work, for how long were you deducted, fill this. You understand where I'm going with this? It's a hectic process, especially when you're looking at several years back. So when you track those contributions, they enable that claim to be made and paid very fast. What are the key takeaways of this presentation? For one, retirement planning starts at employment, and this is for you and me. The moment day one of employment, you get that appointment letter, start planning for your retirement. Yeah? This issue for cost of living, we will save later. There's no day the cost of living will ever go lower. No day. The cost you're buying bread right now and the cost bread was being bought at 15 years ago. Sini tofauti. Cost of land between now and 15 years ago. Sini tofauti. It will keep rising and it will keep increasing, etc. 3, healthcare expenses. You realize lifestyle diseases are right now eating up people's income, even those who have good jobs. One illness, cancer hivi, ime wipe out kila kitu. So we are living in a society with rising healthcare expenses. So save early. When the time when you're healthy, you're strong, keep saving. Don't look at it as a tax, ensure that you save. You will need it at some point. And then social security is a personal responsibility. It is the responsibility of you as an employee to ensure that your employer contributes for you. Yeah? We have cases of some people who, at the point they were decision makers, they were not effecting NSF reductions vizuri. Forgetting that they are also employees. It's just that at that point they were decision makers. And at some point, when now they retire, they realize that Hi, kumbe, there's a big gap in my amount that I'm going to claim because of some of the decisions that I made as an individual. So it is a personal responsibility. Yeah. Some of our other products and services are Haba Haba. We've launched a product for the informal sector. We call it Haba Haba. They're able to contribute through their phone, 25 shillings per day, especially for Mama Mboga. This is a product you can even take for your children who are not employed, Haba Haba. You can go to our website, read about it. For your family members who are not employed, they're in business, they can be registered for Haba Haba, pay something little if they have a business, they have a shop, and contribute for NSSF. The NSSF e-service platform is something you're all conversant with. E-citizen payment for M-Pesas. Remember our pay bill number ile ya kwanza ili shut down, yeah? How many were paying via pay bill the very first time? Hakuna? Then all of you are big companies. You pay the RTGS. And then we also have an NSSF bot. This is how you chat with us through that number 0704-303-303. Just say hi. Save that number and say hi. Hapo kwa WhatsApp. Utaona itakujibu. It's an automated bot. And it will ask you to put your ID number and your other details, and you're able to get your statement. You can communicate the rest also to your members and staff. That there is the NSSF bot, WhatsApp bot, that they can chat with to get their statement. So that is one of the other products that is there. NSSF is working around the clock to ensure that we give you more benefits and products. Madam Riga is going to tell you about that when she comes to do her presentation. If you've written that number, I can proceed there. With my final slide is that more than 58% of workers across Africa are now retiring before 60 years. That is from the World Economic Forum. I want you to ponder on this, that most of you might not even retire in that company. Very many people are now resigning and retiring early to do their things, to do their investments, to do their businesses, to start their own ventures and the rest. The generation of that were working from 30 to 60 and then retiring at 60 with the same employer is slowly leaving. And the current generation, they are mobile. Yeah, they're very mobile. So more than half of them currently across Africa are retiring before 60. So what is the significance of these statistics? That save from as early as you can. And encourage your family members, save from as early as you can. Don't only save for retirement, you might leave early, even before retirement. Madam Riga will tell you how you claim your benefits before the early retirement age of 60. We are paying benefits from 50 years, so you don't need to be 60 years. Yeah, from 50 can pay, and then the Haba Haba product has a package where the money is claimed even earlier, from after 5 years for the Haba Haba. So keep that in mind and ensure that you start and plan for your savings and for your retirement early. Thank you. I'm going to give you an opportunity maybe for a few questions and answers. We have a plenary session at the end for a majority of the questions, but if there's something that is burning, a few questions and answers, clarification, and then we can have one presentation and we break for tea. Burning question?
Thank you. Mine goes to the Haba Haba contribution. If I decide to open one for my mom, do I have to make sure that I pay the 25 shillings every day, or I would settle for paying monthly?
Next.
Mine is just a comment. The NSSF WhatsApp number, it's not been working for some time. If you can ensure that it's compliance, thank you.
Mine is about the issue of Tier 2 and why most of the employees and employers are opting for Tier 2. It's because of the rigorous process and the from experience from many people that some retirees face when they come to check for their benefits. So especially some people who have retired and who are in employment, they advise that because of the government bureaucracies, issues of corruption, it becomes very difficult till that you can even die following for your benefits. So how are you addressing that issue to rural people and to ensure contributors that all their money in NSSF will be okay and will be assessed as to and when needed?
To add on whatever he has mentioned, most of our employers are opting out also because in Tier 2, the interest rates in regards to benefits, the return benefits, if at all you could improve so that it's not a smaller percentage. For example, if I opt out to go to Britam, I'll get a higher interest compared to when I leave my money in NSSF. If at all you could work on that so that you lure us into still remaining in NSSF.
So I'll call the branch manager, Madam Ibtisam, to answer the questions on Tier 2. Being the team leader, there's the question on the rigorous process to claim that has been raised, issues of corruption, and the interest rates. So Madam Ibtisam will respond on that. I'll respond on the first question, first and second. The second one is the WhatsApp bot. I sent a message yesterday and I got a response when I was preparing this presentation. I've not checked today. Maybe I can check and then by the end of this presentation I'll be able to say. But yesterday when I was preparing this presentation, I sent a message and I got a response. Yeah? Maybe you can try right now. We can touch base over. There's no response from your end, eh?
Maybe I can comment on
So on Haba Haba, as my boss comes on Haba Haba, the Haba Haba contributions has a minimum of 25 shillings per day and then with no maximum amount. It was mainly targeting workers in the informal sectors like taxi drivers and mama mboga and the rest. Now, it is not mandatory that you pay the 25 shillings each day. So there are groups, because we've launched it amongst focused groups, like in markets, there are groups that decide to pay this money all at a go in a month, or a week, or on a weekly basis, or on a monthly basis, or after every 2 months. The idea is so that you're able to save 700 shillings and above at any given point, or a minimum of 400. Minimum of 400, but averagely 700 and above. What it simply means is that if you register them for Haba Haba, it is not mandatory that every day you will pay that 25. You can get 1,000 and pay. After 1 or 2 months, you can get 500 and pay. But the idea is if you're able to do more than 400 shillings, averagely monthly for the year, then you'll be able to now get competitive interest rates.
So it has no limit?
It has no upper limit, yes. You can do as much as 25,000, 30,000. It has no upper limit. The 25 was just a consideration for the low income mama mboga, but the upper limit is not there.
And the lowest is 400?
Yes, per month.
Thank you.
Thank you. I'll comment first on the WhatsApp, the bold. At the moment, it has been on and off because of they're trying to upgrade it. So whoever is doing the upgrades, it will keep on fluctuating until it is handed over back to us. But the good news is you can still get your statement with the e-service portal, especially because you're already very familiar with the e-service portal. We've been interrogating it on the part of the employer. The higher when you go to the menu on the e-service portal, once you enter the e-service portal, we have that section of employers. And then down there, most of you have never interrogated it, but we have a section for members. So just like the employers can access e-service, even members can access e-service. And the procedure is the same. You're already familiar with it. You have to first register to access the e-services. And then you get that the registration number, 2025 stroke, and then a few digits with the member. After that, you can SMS me for a PIN key. You don't need to come to the office. Once you get the PIN key, then as a member, you can be able to access. That's the most reliable way to get your member statement. Especially so because you're already interrogating NSSF e-service. You're so familiar with it. You can interrogate it even with your eyes closed. So all you need to do is go down the menu, you'll see now, member. Members can access e-service. And after we provide you with the PIN key, you can activate as a member. Once you activate it, you get your statements. And you can do that even for your colleagues. And you can send me as many PIN keys that you need as you need for the day. And if you have hundreds of employees, thousands of employees, we'll provide them. Then you can give to the individual, you can give the details to the individuals, their usernames and their passwords. So anytime they need their member statement, they can go and print it. They will get it in soft, you can have it, you can print it into hard. So as we are waiting for the upgrade, we can still access our statements from the comfort of your office. I hope that answers the access of your member statements. And then now on the issue of the interest rates, but before the interest rates, I wanted to talk about the delay in claims. One of the things we do in the office to improve on the customer experience is by following up on claims. We have a system called EDMS. So our documents are electronic. We don't have physical files. They're called electronic documentation. ED? Yeah, electronic document management system. So that is the one step which we have taken to improve efficiency in benefits payment. Hauwezi kuambia file yako imepotea ama it's misplaced. You can pull it in a minute from the system. We have a very robust EDMS system. And as you are talking, the moment you give me the number of a delayed claim, irrespective of where it has reached, I can tell you from the system at which step it is at. And even the exact officer who is handling that file at that particular moment. And since we have the VoIPs, which are interconnected the whole country, wherever they are in our network system, I can just call them immediately and ask them to release, to work on it and release, and then move. So it's easy. Ideally, you can even pay a claim in a day. Those are my experiences, especially for people with very serious ailments like heart ailments or critical illnesses. We go ahead and make sure we pay in a day. That's the reality on the ground. We can pay in a day just by following up on the steps and who has it and continuing following up. In an hour or two, it has already reached EFT. and in a day or two it has matured and declared the EFT is paid. So we are committed to improve and avoid delays. And there is also intention of, one of the delays is fingerprints. The fingerprint technicians are the ones who identify you. Because as Omar was saying, there are millions of contributors. So to avoid paying wrong claims, there has to be an identifier. And the identifier in NSSF, you've seen in banks, in insurance companies, the fraud rates are very high because they don't have identifier. We do have it, and that is the fingerprints. You do know that your fingerprints are unique. They don't match anybody else's in the world. So once we will digitize that also, now it's manual. We are reading the fingerprints. We have fingerprint technicians to read, identify you, and then the final stage is to pay. Once we digitize that, the fingerprint, whereby we call it, biometrics? Yeah, whereby in a split of a second, the moment you press the finger on the electronic print, it can be able to identify you in just seconds. You've seen it in those US movies, how they easily identify a person using the fingerprint. Then once we improve on the identification, we'll be able to pay in a fraction of a day, not even a day. So we are moving there. Most state corporations have moved to electronic fingerprints, and we are also moving there. The moment we move to biometrics, that will be the end of the delays, because we'll be able to be paying in a fraction of a day. And on the issue of interest rates, I would like to hand over the mic to my colleague who is an expert in numbers. Evelyn.
Good morning. Yeah, Evelyn. When she gave the question of interest rate, I went out and made a call to investment department. Kuuliza, we are in a sensitization, and a member has asked about the interest rates. Kwanza, 2022, 2023, and 2023-2024 interest to members haijawekwa, but wameniambia sahi they are in the final phases, so before this month ends hiyo interest itawekwa. Madam Dama anakuanga akiuliza, why is my statement is still the same? So before the end of this month interest itawekwa. So about how much is the interest, that one depends on the performance. After we are done with the books, kuna auditor anakuja ku-audit, and then there's an actuary who evaluates. So huyo ndo anatu advise how much we are supposed to declare to members. So it's not sio mtu tu mwenye ana question. Yeah. So sio decision ya mtu, we involve some professionals. Have I answered your question?
These are the same professionals like the same professionals in terms of employers. It's like in the insurance companies where they declare higher interest rates. Why in particular this was a day so peculiar that they declare such low rates?
But yeah.
Later on, I think I'm going to project a statement here to answer this question. I want to project a statement, I want to do a demonstration. What happens is, most companies are offering the interest for that particular year as the interest, and then they're saying it's compounded, right? In NSSF, the whole amount that is there, that is the standard contribution. If you print your statement, you will see three things. You will see standard contribution, you will see the voluntary contribution for those who are making voluntary. If you're not making voluntary, it will be zero. And then you're going to see interest, and then you're going to see total amount. Total amount is usually at the top right corner of that particular statement. Now, when you interrogate that statement, the interest computed for NSSF is usually the compounded interest. That is, they take all the previous contributions, including all the interest, and then now it is compounded. Now, you find that for most of the workers who are retiring now, what they have in their statement in terms of the total amount is usually one time equal to or even more than the principal amount that they contributed. I'm going to do a demonstration for that later on so that I show you. Yeah, ours is compounded. That is the entire amount contributed plus the interest and compounded for when the interest is given. On the question of the interest for 2022, 2023, and 2023, 2024, there's going to be an AGM in the course of March or April. There's going to be a gazette notice. Immediately after that AGM, the interest is going to be credited in the members' statements. So you'll look out for that, but the AGM, I think, is scheduled for end of March or early April. And some of you will be invited, like we've done in the previous years.
Can I put it simply that the interest rate is determined by the market? What has the market done? Where has NSSF invested the money? How has that market done? That's what will determine the interest rate. It's not NSSF who decides, it's the market where NSSF has invested the money.
Maybe to add on to that, I think by the fact that this is a guaranteed investment, most guaranteed investments by nature, their interest rates are low. So I think that would be a contributory factor, not about the actuary or that one, and maybe the market person, but more so the baseline is being a guaranteed investment.
Yeah. So are we okay up to that part? Thanks for the two comments from the gentlemen who are added on to what we were saying. Can we now proceed to the second one so that we are able to take the break for tea and come back?
Okay, so I'm going to present on the payment of contribution and return uploading. It's a small presentation because I know most of you know the process. So I want to talk about the payment modes that we have at NSSF. We have checks and cash. Although for the checks we had stopped because we were receiving so many checks, and someone issues you a check and maybe the account has no sufficient balance, and then the check bounces. And you see when it bounces, the money still is in the member's account. We can, if we debit the amount, it will only debit the statement of the employer, but it cannot debit the member's. So, but for now we have so many employers complain. They are like, this is our policy. So we gave provision for that. So one of the payment mode is check and cash. It's paid in the office, and then we bank it the following day in account. We call it in a KCP account, 299. Whenever the check bounces, then we fine, like we have bank charges, because us will be deducted bank charges. So we will charge 5,000 bank charges. Another payment mode is direct cash deposit. It is done in 3 accounts. There's a KCB account, cooperative account, and national bank. These accounts are fully integrated for direct cash deposit. So when you take your cash to that to the bank, this amount will credit our statements and it will also credit our system like a cash book. So you don't need again to come back to our offices for manual receipting. And then we have M-Pesa. M-Pesa is the e-citizen one, that when you have your UPN, the pay bill is 222, and then the account number is your UPN, and then you pay. And then we have the EFT and RTGSs. These accounts are not integrated. Most of the transactions, they credit our accounts and our systems, our cash book automatically. But most of them, with those huge amounts, we still have to receipt them manually. We are in a process of integrating the accounts so that when you do EFT and RTGSs, it updates automatically, but for now we are in the process. The accounts that we use, it's KCB, National Bank and Cooperative Bank. Yeah, so there are some 2 bank accounts that are upcoming, Equity and DTB, but we are yet to receive more instructions on it. But in the near future, we will be able to bank in Equity and DTB. So as an advice, I would wish to tell you that, okay, within the month, we normally go through our bank statement and our unreceipted UPN reports so that we receipt those contributions that have been going to the bank, but they are not updated in our system. So we receipt, but we can't finish that. So I would urge everyone, once you pay to the bank, make sure you get a receipt. If you have not gotten a receipt, then you contact our office. Okay, so uploading the return. I think everyone knows how to upload a return to get the UPN. Anyone having difficulties? Okay, when the system can be down everywhere, but most of the time it's up. Yeah, because a lot of people are uploading towards the end of the deadline. So you upload a bit early. Yeah, so no one has an issue. I've got so many queries about how are we going to do the year 3, how will we file? For those that have opted out, you know, you just, at the column of gross pay, you just write the minimum limit of 8,000, and then it will calculate itself. I think that's all. Any question? Quietness means understood. Thank you.
Okay, I just have one question. We have situations whereby we have employees who, in one way or the other, their salaries are terminated because of disciplinary issues. Once they resume, or once they are cleared, there is this issue of paying those certain deductions, including the NSSF. So how do you pay the arrears for such issues?
You say the salary is terminated or they have been suspended. When they come back, you pay arrears.
My name is Wilfred Ruga. I'm in charge of benefits in Mombasa office. And I will take you through the benefits we offer in NSSF. We have retirement pension or early retirement at 50, and normal retirement is 60. So when you are 50 and not working anymore, you can come to NSSF and you get your benefits. If you are 60, you know that is the end of the journey of being employed. So that is the gazetted years, 60 years. So when you attain the age of 60, you can come to NSSF. We also pay you your benefits. We have requirements for the payments which you need to have. Last time, those who were here, I spoke to you about the letters which we always request for. I'm not expecting a letter to come from the accountant, to be signed by the accountant where we have HRs. And that is where we have a challenge. We find accountants are also writing letters to employees. I don't know how possible is that. Can I get an answer? Can I get an answer? For NSSF, when we get a letter from the accountant, there is some collusion. There is some collaboration which is between the employee and the accountant. So that one we don't agree, please. So let the letter be written by the director or the HR. I request, please, because I don't want to be sent home. So make sure that when you write the letter, you know what is required. You don't have to say, Winfred, you've retired. You need to say, at least you give me 2 names. But a letter with 1 name, it will not go through. A letter without a signature, the author of the person who has written, and the designation, it will have to come back to you people and write it in the right manner. So that is early retirement. If you are 50, you can come and get your money and you're not working anymore. 60, it's age benefit. 50 is withdrawal, age benefit is 60 years. We have invalidity benefit. Invalidity benefit is a benefit which is paid to one who has been incapacitated, cannot work anymore. If the doctor has recommended that you be retired on medical ground, once you get a letter from the doctor, from the employee, you will have to come with that letter to the employer. So the employer now will have to agree what the doctor said and write a letter recommending that person to be retired. So you will now write and say, according to your doctor, we recommend the retirement, early retirement on medical grounds, and that one will be accepted. We issue forms for the invalidity benefit where the some employers are stubborn. They don't want to fill this form. There is a part for the employer where the employer has to sign and show that it is true this person was working with the company. So please, when they come over, you know they are needy, make sure that you write and sign. And that is done by the HR. It's not the accountant. Survivor's benefit, on invalidity, you don't have to attain the age of 50. Anytime the doctor said you cannot work anymore, any number of years, you are free to come and get your benefits. The same with survivor's benefit. Survivor's benefit is a benefit which is paid to the dependents of the person, of our member who has passed on. And on that, we have a funeral grant which we give within 90 days from the date of death, where the funeral grant is payable to the next of kin. Once they are not aware, most of them, they are not aware that we give funeral grant. There's a token which we give to facilitate the funeral. So it's not a lot, but it's something for the members. So immediately we lose a member, it's good you advise them. They come to NSSF. If they don't have their NSSF numbers, please, I request you give them the NSSF numbers. Most of them are so illiterate, they don't understand what to do. So I request you as employers to always give a hand. And on the same, make sure before they surrender the ID of the deceased member, they make a copy. They make a clear copy. As our BM has told you, we've not yet done the ID biometric, it's yet. So before that, we request for you guys to have the ID copies for the members. So you request the next of kin to remain with a copy of ID of the deceased person, because it's a must. And the funeral grant we pay immediately. You come with the burial permit or the death certificate. It will depend how fast you've gotten it. The burial permit, you come with it, and then we'll be able to pay, to give the token. On survivor's benefit, as I had told you, we don't wait until one is 50. Any time if one has passed on, we pay survivor's benefit. Survivor's benefit is paid to the next of kin, the dependents of that person. Most of you will say that you've not written anywhere in NSSF your next of kin is who. Sindio? But with NSSF we have an act. We have the act which guides us on who to be paid survivor's benefit. If it's a man who passes on, automatically it is the wife. If this person didn't marry, we will pay both parents. If this person was not married but gave birth outside wedlock, we will pay the person taking care of the child if he is a minor. If this person, we have Muslims here, right? And we are entitled to marry more than 4. Maximum of 4. Maximum of 4. So how do you want us to pay? How do you want us to pay? All of them have to be paid. Not the youngest. Everyone is entitled to be paid. Let me talk about survivors because it is too... I really sympathize with those who are left. And especially we people from across Lake Victoria, those sides. Once somebody passes on, please, at the time of death, this woman was a wife, right? At the time of death, this person was a wife, had a wife. And in most cases, we find that after the burial, mtu anaenda zake. But when you come to NSSF, at the time of death, this person was a wife to somebody, right? So get it right, because that is where I find vita. Bibi alikuwa ni mchanga, kwa hivyo kwa sababu alikuwa na mtoto mmoja, mnamwambia unaweza kuolewa kwingine, so utachukua pesa ya mtoto wetu. But that should not be the case. Laana pia inatufuata, tuangalie please. So with survivor's benefit, you are in Mombasa, you've been working in Mombasa, and you come to Mombasa office, I give you the claim forms. Once I tell you, you go to Kisumu, you will tell me, bwanangu alikuwa akifanya kazi hapa, hata nimeenda chief akaniambia niende Mombasa office ndio nitalipiwa. You remember when you did registration? You remember when you did registration with NSSF? There's something we call a BSAT. That document is the one we retrieve at the time of payment. And that BSAT will tell me your sub-location is where, right? So I will want the chief of that place to write and tell us about you. Because maybe you're in Mombasa, you've died at the age of 54, maybe kule Kisumu ama Western kokote pale uliacha bibi, si ndio? Hata hapa Mazeras uliacha bibi, kuna bibi wa kwanza, ukaja hapa ukakutana na Winfred, ukamweka Winfred pete, ukasema huyo ndiye bibi. But remember there is a wife home there, si ndio? So that is why we always request one us to go to the home district for the forms to be filled by the chief to write a letter to us and tell us about the deceased person. If he was married to one wife, akamwacha, akaoa mwingine, but they had children, we need a letter to say that this person was married to so and so. They were blessed with how many children, the number of children and their heads. From there, he went ahead and divorced that one, got another one. They gave birth to 2. After that, akaoa mwingine. Unfortunately, we mwingine hakuzaa. They are all wives. But the first wife, if she had left before the death of this man, she's not a wife. But she will remain to be a guardian if she has children who are less than 18 years. So she will be paid as a dependent. Okay? I know that is where I have challenges, but we will sort them out as they come. We have immigration benefit, which is paid to non-residents, all those permanently leaving the country. For example, Winfred here has gotten a mzungu na tumeoana, sindio? I will need his passport. I will need to get an affidavit because I'm a Kenyan. And air ticket, since we are leaving the country to the permanent place where we are going. So I will need all those. We have nurses who are going to US to do nursing. And you find that somebody has got that, he has the visa. But remember, the visa is not, it is that 2 years, not yet, he has not been given the permanent visa. So until you get the permanent visa is when you can be paid your benefits fully. I don't think whether there is anything else, unless we have a question. If there is any question.
I have a question. So if I have 2 wives and Bangwakano, will the Bangwakando be recognized?
We don't recognize Bangwakando. But now if there is a child, and this child is in your name, we need to get evidence from. You need to give us evidence. And the chief will also have to know that we are party to that man. Okay?
Yes. Mine is more of a comment in regards to inclusivity. In a situation where there is a company that, yes, we know the retirement age is 60, but you still have workers who are still working past 60. So based on whatever act you have, you cannot claim until you do not work. That's right.
You can't be paid until
you leave. Now the comment is to be more inclusive in regards, maybe you will go and discuss it in regards to NSSF. Because if at all I'm at 70 and I'm still working, the NSSF benefit, it's about me, not even my dependent, because I'm the one working, I'm the one saving for my future. Now the future is present and I'm still working. If at all you could have like more of, I can now claim, and then it's not a matter of now not being deducted, because I'm very sure I'll not work for an extra 30 years. The other money can be claimed by my dependent, but now I need to benefit from whatever I have been deducted. So you need to make sure like there is more of inclusivity in the essence. I'm 60, still working, I get the money, but I'll still be deducted.
On that, I think most of the directors, most of the directors, you find that they are even 80 and still seated in the office. He doesn't want to sit there. We advise they just hand over. Let him be coming, but he needs to get his money. Let him come. Let the HR can do that. The HR can write a letter. Akaya tulia kama biashara ni yake atakuwa tu akija tu, lakini and then he gets his money. If he wants to go back, hajaangalia kazi yake.
By that way, you mean to say that he cannot benefit so long as he is.
If he is a director, compliance. He is a director. Is it deducted money? So where will that money go?
No, what I'm saying is, leave alone a director, as she has put it.
A normal worker.
Just a normal worker. Because
please, until you retire, is when you get your benefits.
We are saying, you see, okay, fine. We are giving you.
Okay, I will.
We are giving you food for thought because.
Exactly, because it's affecting us. Yeah.
I've taken note of that, and we shall discuss.
Because there are people who are retained in employment because of their expertise skills.
Exactly. I have like 20.
Until they are 70. So if that one can be considered, because you may prompt this person to leave employment chasing for this benefit while it still is needed.
So we've noted that, Madam Ibitsam. We've noted that. we shall hear it out and hear what we thought.
So there are those who are working until in their 70s.
Yeah.
They are very fortunate. In the Bible, what's the life expectancy? 70. In Islam, it's 63. So they are very fortunate. What we are saying, we've had such cases, even with bankers. There are those corporate bankers who are retained. But I've seen what the banks do, they give them their retirement letters first. So once you give them their retirement letters, they can come and claim for their monies when they're 60. And then now they take them on contractual basis. Yeah? And then they keep on renewing the contracts until they're in their 70s. Is that what you're doing?
Okay, right now we've not opted for now, let's say the contractual benefits. It's still on permanent, so we still do whatever we are doing. But now I was saying in the essence, there's that option.
Yes. Maybe you can copy what the banks are doing.
Yeah.
They give them, they know that they want to retain the workers. But they also know that they want to maybe process their pensions, their NSSF, they want to process other insurances, maybe private insurance. So they formally give them their retirement letters that they're retired. Then they use those letters to apply for whatever benefits they want to apply, give them like a window for a month or two, and then they recall them as contract employees. Because are you going to, after 60, are they still on, do you have anything like PNP? Yeah. They can even take them back on permanent basis, no worries. But they issued them with the letter, which they can use with a small window, they can use to, but make sure that you get your claim first before you go back to the payroll. The moment the next NSSF monies are remitted and your claim is still in process, be sure it will not be paid. Yeah? Thank you.
So if one is 70, give them the letter, post kidogo, you get your money. If you don't get your money and I'm computing your file and I find that in a statement, when I'm doing the computation, I will get a fresh statement. If I see money for February here, automatically I'll terminate that case. So I hope you've understood that. Yes. This is an act by the government which has given the retirement age to be 60. So unless it is changed in the government, so unless it is changed, there is nothing we can do. That is the easiest way we can do to help our members to get their money. We need to get a shortcut for our members to get their money before they die. If one has gone back to work, please, I know we have experts. Kumuachilia kazi yako itaenda vibaya, si ndio? So make sure that that person, he gets his money, and then if he comes back on contract basis, make sure that it is contract basis. On contract basis, you will deduct the money, but at the end, as in letter barua ya end of contract, ambayo atarenew tena, it should be non-renewal of contract. There are those who are giving non-contract, those letters for contract, yeah? But now if he has been on contract, let it be non-renewal of contract. Okay? The letter must have the names of the person who has retired and a clause on that letter which says your retirement date is this. And before coming, make sure that the contributions mumelete zimeingia. Isije ikawa na retire February na February bado haija. Was telling them to wait, naona wanakataa. But we advise them, you wait until your employer pays for the February contributions, which we thank you, you do it very fast. 9th, you are done. So make sure that the letter has got the names, the person who has written that letter, the name, author, designation of that person, and it should be on a letterhead or at stamp. At least you have a stamp for the company where you write. And the standard letter, tutajua tu ni standard letter. Zingine unapata, even the copy typist ni kama alichukuliwa huko mtaani. It is not standard. So I hope you understand what I mean. The HRs, please. Isiwe za barabarani. Accountants, please don't write letters to your employees. To us, it doesn't add up. To us ni kama huyu HR, accountant na member wamecollude, wewe fanya nipate hii pesa tukule. Please, that is somebody's money. Na kuna laana. Na akikuharakisha aende achukue, akirudi tena, it's hell. Any other question? Yeah, accountants are doing that. I know some accountants are doing that. Anaandikia mtu barua, wewe nenda upate hii pesa payroll. Director kazi yake si kusaini ile check inaenda bank. Hata ajui kuendelea nini, nilize tunatia signature ajali. So please, let's be keen on that. Any other question? Any delayed payments? Last time nilikuwa na survivors ambao walikuwa miaka mingi watu wangu hawajalipwa. I'm not seeing them, so they've been paid. They've been sorted out. So thank you so much.
So, Madam Evelyn Wamwandu, karibu. She's just going to tell us something basically on compliance. Compliance come to your offices, at times there are things they need from you. They don't get them on time, it delays the work. So Madam Evelyn is just giving us one word on compliance, what they require from you. Most here are accountants and payroll officers. And then we do the final question and answer, and then we can break. We call it a day. Eve, karibu.
Hi everyone again. Like I said, I'm Eve. I don't know what emerging issues you might have or questions regarding compliance, because most of the times I've been dealing with most of you. We've sorted out the issues, so unless there are questions you might have, maybe I can ask. You can ask, I'll try and answer. Issues regarding compliance.
How soon can I get my compliance certificate?
Or regarding compliance certificate, you have to lodge the claim first. You do a formal letter, address it to the branch manager Mombasa, bring your payroll for the last 6 months. Then we do the inspection to ensure that all contributions are up to date. Then if everything is okay, within a few minutes you get it. So it all depends on how well your records are with us. Yeah. Good. Any question?
What if there is a difference between the number of employees you pay for NSSF and the number of employees you pay for? Does it happen?
Yeah, of course. We have many situations where you find what you submit to us is actually not what is in your payroll. So once you bring the payroll, we're able to do a small audit. We compare the two Then if there are any outstanding issues, we demand what you've not paid. Then you pay plus the penalties. Of course, you know any unpaid amounts attract penalties. So you pay, then we solve the issue. But feel free to come to the office. In case you have any queries, we'll always be there to help you.
Thank you, Madam Evelyn. There's a hand? Okay. So we will take final comments and questions. At the beginning, you did not give your expectations. I do not know if your expectations have been met. All the queries and concerns you have about movement to the year 3 rates have been met. And if there's any other pressing issue, is there any other pressing issue, any unmet expectations, any clarification that is required from us?
I think I'm audible enough. So when I was introducing myself, I talked about me being an employee here in Kenya of a company that also has maybe a main branch, or rather a branch in Kigali that is now Rwanda, or maybe a country that actually needs me to have a visa to work there, or rather work permit. And now I'll be earning in that country, to be honest. I'll be earning in that country and not in Kenya. Madam talked about once you have a visa, you can get your retirement benefits, or your contributions as per that time. What if I don't want to actually get my benefits? I still want to make contributions, and I'm in the other country. Remember, this is a company that has a branch here in Kenya. That means the employees here in Kenya contribute to NSSF for their retirement benefit, and I want to maintain the same. So how do you integrate that?
Madam Rita wants to answer.
Okay.
So if I've heard you well, you've been contributing here in Kenya. Maybe you've gone to Rwanda, there's a company there, you are still, and they are contributing for you. And Rwanda has got a pension, there is NSSF in Rwanda. So it is work in progress in Kenya, so that we can interlink the pension, your pension, you can transfer your pension from Kenya to the pension of Rwanda. It is work in progress.
So that means when it's time for me to claim, I can claim the total amount based on the country I'm working at that time.
Yes. Okay.
Assuming now you go to Rwanda and they're remitting from that end. When you're coming back, the pension from there writes to us, says that Yvonne has been working here, blah, 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 and we want to move back her money to Kenya. So they write to us directly to fund. Then they move the whole amount back.
Thank you very much for your patience. There's another question.
I want to go back to the product we talked about, Haba. Haba, yeah. So let's say someone is a Boda rider for maybe 1 year, then later on he gets into formal employment, and he was contributing to Haba, then he gets formal employment. So what happens to him? Does he register again? What happens to the contribution? Are they merged together? What do you know about it?
Somebody who is a rider or in informal employment, you still use the same process of becoming a member, and the account is the same. This product is unique because if you contribute to Haba for the next 5 years continuously, you are able to withdraw at least half of your contributions. That is what makes Haba unique. But for the rest of the products, if you convert from an informal setting as an employee to the formal, then that number is still valid. You'll continue, your account will still be credited. Using that same number, it won't change. But the benefit of that, you will have contributed to Haba Haba for 5 years, and after 5 years, you can benefit half of your pay. You will have missed that. So you'll have to wait until you retire at 60 or maybe 70 and withdraw your cash. I want to recognize the presence of one of our key stakeholders, Madam Florence of the FKE, and allow her to say a few words before we come to the close of this session. Thank you, Madam. Karibu.
Still morning. Good morning. Yeah, as you have said, my name is Flo. I'm Flo Dwako, and I want to take this opportunity to thank all of you for coming. I don't know how many of you are members of the Federation, by show of hands, please. Let me see who are members of FK. What? The rest of you, where do you belong to? NSSF has shared their governance structure. The structure is tripartite in nature. You either belong to COTU, for those who have organized labor, employers, and the government. That's how we work here in Kenya. You can't work outside the umbrella of employers. Please call me 0722 8804. 11. You need to be safe. 0722 880411. FKE is the trade union for employers. When the union is fighting there with their respective unions, we run to FKE to cover you. We'll fight for you. NSSF is our member. They are our member, a very strong member, and that's why we sit on their board by nature of the employment sector in Kenya. For me is to say that the Federation, we are committed to working collaboratively with NSSF to ensure that we successfully implement these changes. I know the new contributions are heavy. They have huge financial implications for our members. But as we have been told, you will go home, you will retire in a dignified manner. It's good to go home and retire nicely, not suffering. I look forward towards the future that will be meaningful to Kenya and towards a future that is bright. We will commit as FK to support those who are our members, to guide you in wherever areas, and I'm believing that the teachings that have gone around today, that you take them and continue calling them. You saw a strong team that the branch manager shared, introduced here. They are young, agile, active, and they can help you. So continue engaging them, continue engaging us. We fully support the implementation because of the dignified retirement. I thank you.
Thank you, madam. Thank you so much. Mkitaka kutetewa, shikeni huyu mama. So, I want to thank you so much for being with us all this time. For our Muslim brothers and sisters and all the others who are fasting, please, you don't need to leave immediately. As we had said, networking is a very good tool to grow your business. So you can sharpen your networking skills a bit. For those who are single, I'm sure you can even get your spouse. That's personal growth. Never forget on personal growth. Career grows, but there are some things that go with age. Utajipata umepitwa na wakati. So personal growth is also important. We are packing food for the Muslim brothers and sisters. Please don't leave before you go for your packed meal. We'll appreciate if you can go with your packed meal so that it's not left with us to waste. And feel free to, we are welcoming you to the meals, and even after the meals you can feel free and mingle, exchange numbers. This is the time for you to exchange business cards, some employees keep on hopping from one employer to the other. But because the employers don't know each other, that's where the employees take advantage. But the moment you know each other, it's easy for you to call one another and say, ametoka huko, amekuja kwangu, ndio yule msumbufu. So it's good to be able to network, even amongst the employers. The moment you can share data. The government nowadays has that strategy. You come to us and you have 100 employees. But NSSF, because even the employer is contributing, you end up contributing for only a selective 20 employees. But for NHIF, you don't reduce the numbers because you are not contributing the other half. It's the employee who contributes the full amount. So, because we share data with NHIF, ukiingia tu tushajua that you are underpaying us. You can use the same strategy, share data with your fellows here around. This is an opportune time to do that. Maybe we can close with a word of prayer from a Muslim, because I heard we started with a Christian prayer. Na vile tunafunga, wajua yetu inaenda straight.
No barrier.
No barrier. The one who said no barrier should come and...
Yeah.
Just come here.
Alhamdulillah Rabbil Alameen, wa salatu wa salam ala Rasulillah sallallahu alayhi wa sallam. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار الحمد لله رب العالمين.